In today's video, we'd like to talk about GDP growth outcomes for Europe and the US. Yesterday, we had the announcement of the UK budget. Now, in today's video, I'm not really going to touch upon what was announced and released in the budget because we have other content on our YouTube channel covering that. So if you're interested, please have a look at that. And today, we'll be releasing a podcast on the budget. In terms of market reactions, however, to the budget, we will talk about that. And the main reaction that we saw was within the UK gilt market. And that was because of the extra issuance of gilts that we're going to see to cover the budget. Now, over the day, we saw a 20 basis point swing in gilt yields. So that's actually quite a significant move in one single day, with gilt yields closing the day higher than where they opened because of the extra issuance that is expected to come. Now, moving on into GDP growth, we had that yesterday from the Eurozone and also the US. So if we start with Europe first and then move on to the US. So within Europe, we saw GDP growth come in for the third quarter at 0.4%, higher than what the market expected at 0.2%. What we saw when we look at the individual countries that build up that report, we saw better numbers from France, and that was because of the Olympics that they had. Also interesting for markets was that Germany posted positive GDP growth of 0.2%. Now, although that number doesn't seem high, the market had been expecting that number to be negative, and that would have meant that Germany entered a technical recession after seeing two back-to-back negative GDP numbers recorded. Now, what that will ultimately mean is the ECB might reconsider its path of interest rates, with some members wanting to do interest rate cuts quicker and sooner to try and uphold growth within Europe, whereas some members were a little bit more cautious. So we'll see that narrative develop when we get more updates from ECB members. Looking at the US, we saw third quarter GDP growth come in at 2.8%, and that was roughly at the market's expectation. When we look through the report, the main strength came from consumer spending. So the US consumer continues to remain strong and robust over this period. That number came in at 3.7%. And we're seeing consumers spend on both goods and also services. However, when we look through the report, we can see that there's a difference between the upper income cohort and the lower income cohort. So we've mainly seen the growth in consumer spending from that upper income cohort, with those who are earning less continuing to feel the squeeze from higher prices. So that's all for today's video. Please, as I said earlier, check out the YouTube channel for more reaction to the budget, and we'll catch you in tomorrow's episode.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.